Everyone's saying this time is different, but 5 days from now, the FOMC meet, and that decision could decide whether this Altseason Index signal is real, or it's just another fake out. Here's the bigger picture. History doesn't repeat, but it does rhyme. And right now, the setup looks very familiar. So let's break it down into 4 pillars. By the end, you'll see why this alt season might actually be playing out exactly the same as past cycles. This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research. This is the Altseason Index. It tracks the top 50 coins and looks back 90 days. The number tells you what percentage of alts are outperforming Bitcoin. When it's at 25, Bitcoin's dominating. When it's at 75, alts take over. Right now, we've just gone from 25 to above 75, which looks like a breakout. But here's the catch. Half of the breakouts above 75 in history are just fake outs. It's literally a coin flip. 50% real, 50% fake. But the filter is simple. If we hold above 75 for over 1 week, that's when you know the signal is real. And when it's real, 2/3 of the time, you get a standard run lasting 2 to 8 weeks. And 1/3 of the time, you get a mega run lasting 8 weeks or more. On average, these runs last about 7 weeks, with the shortest being 2 weeks and the longest about 12 weeks. If the index can stay above 75 for an entire week, you're in business. And where are we today? Just 2 days in above 75. Way too early to confirm. But right in the middle of that 1 week countdown is the FOMC. So whether this turns into another fake out or the start of a real run will probably be decided on the Fed. Now, normally FOMC meetings bring volatility. Traders brace for big moves. Sometimes it's risk off, sometimes it's relief. But look at the data when cuts come at all-time highs. Across the last 12 cuts, markets finish higher 3/4 of the time, with an average gain of almost 3%. The only real outlier was in 2019, and that wasn't really about Fed policy. That was because of the global you-know-what in early 2020 that just shut everything down. So the takeaway is clear. Cuts at highs don't usually end rallies, they extend them. And if history is any guide, the probabilities say we go up from here, 3 out of every 4 times. What makes this timing even more interesting is because it's Q4. This lines up exactly with the traditional crypto Q4 climax. Now let's zoom out and look at seasonality, not just in the calendar, but in Bitcoin's own cycle history. Every halving is marked in this chart, and then we measure how long it took for Bitcoin to go to the top after that halving. 2020, short cycle, 367 days. 2016, a bit longer, 526. 2020, longer again. Notice the trend. Each cycle, the top has come later. Now, we're in the 2025 cycle. We're already past 548 days, which means if the pattern holds, we're looking for a top window, roughly October, right in the middle of Q4, maybe November. That lines up perfectly with the normal market seasonality. Historically, September is the low. Markets tend to move forward from that point, especially in post-election years. Whether you look at the calendar or the halving cycles, they're both pointing to the same thing, a setup for a late year rally with the real fireworks peaking in October/November. Again, nothing's guaranteed, but history isn't just rhyming here, it's almost singing the same song. Now, this cycle has been categorized by DAT mania. Big institutions pouring capital into tokens. Let's zoom in and look at these flows. Take a look at the Ethereum playbook. Big treasury raises came in, the money flowed into ETH, and look what happened. A 100% rally in just around 12 weeks. Then, once the flows slowed, ETH began to stall. That's the pattern. They raise, they buy, the chart rallies, then there's a pause. And now look at Solana. We're seeing the digital asset treasury narrative heat up fully for Solana now. We've seen Pantera raise 1.25 billion, Multicoin Capital through Forward have also raised a massive $1.65 billion, and that's all in cash. That means there's no locked SOL that anybody's putting into the deal. This is all fresh, new capital that's going to be used to buy Solana, essentially off the open market or from people who are planning on selling. What this means is that if we see the same impact that we saw for ETH, remember Solana is smaller in market cap, so it actually needs less capital to move it further. We're seeing about $4 to $5 billion in net new flows that should be coming into Solana, a similar amount to what's gone into ETH, which raised ETH 100%. If the same thing happens to SOL, these kind of ranges are not ridiculous. A $350 to $400 SOL is likely if we see this continued run and continued buying from these companies. And whether you're bullish on Solana or not, the flows don't lie. The money is lining up almost exactly the same way it did for ETH. Now SOL's already moved. Maybe the move is done, but this wasn't the case for ETH. The companies raised, they bought, price went up. They raised again, they bought again, price went up again. Now, this all hinges on that key FOMC meeting. Depending on what happens in that meeting, if markets continue to run, we are at all-time highs. We've seen the odds when markets are cut at all-time highs, 75% of the time, the SPX goes up higher afterwards. We know Bitcoin is a proxy, a beta to the SPX. It moves in lockstep with it most of the time. And the alts we've already seen are outperforming Bitcoin in the last 90 days. If we see that continued, we know 2 to 12 weeks is the range, with about 7 weeks being the average. That's multiple data points all lining up to say this time might not be different. But let me know what you think. Do you think this time's different? Do you think we're going to be doing that extended cycle, the general liquidity cycle that people are putting on it now, thinking that mid 2026 should be the top? Personally, the way I'm playing it is I have planned on playing it. Q4 is what I'm planning to exit all of my short-term positions. I still hold long-term positions in tokens that I think are going to be here for multiple cycles. That's a portion of my allocation, but all of my trading allocation I am planning on selling at some point in Q4, unless we see a big sell-off. Personally, I think if we see a big sell-off after FOMC in this sort of region and we don't see this alt season trigger fire, that's a good thing for the length of the cycle. If it's fast, it doesn't last. If we see a big cool off from here, I do think this extending cycle thesis becomes more and more likely. But if things get really hot, really heated over the next couple of weeks, it's a good sign to me that it's time to start taking more and more risk off whilst the cycle gets closer and closer to its climax. But that's just my opinion. Who knows what might end up happening? Let me know your thoughts below. If you enjoyed this sort of deep dive thesis driven video, let me know. I did one last week here on what I think is a much better portfolio structure than most people do. I think most people hold too many tokens. Go and check that out here if you're that way inclined. Otherwise, thank you ever so much for watching. I shall see you in the next one.